All right. Good afternoon, everyone. Thank you for coming to the newest installment of the Financial Wellness Series. My name is Chris Milliron. I am our Chief Lending Officer here at TBA Credit Union. Today, we're going to be going over understanding credit scores, information you didn't know you wanted to know. All right, so we're going to touch a little bit on the credit bureaus themselves. What is credit and how it is used? Why is credit important? How can I check my score? What items impact my credit the most? Credit tips and impact guide, as well as some recommendations and or disputes. So there are three main credit bureaus, as you can see there: Equifax, TransUnion, and Experian. And credit bureaus store and report our personal consumer information in one convenient location. There are different scoring systems in addition to different credit bureaus. We won't really touch on that today, but just to note that there are some differences out there. It is also important to note that not all creditors report to all three bureaus. So just trying to keep that in mind. Creditors can typically pull a single score from a single bureau, or they can pull what they call a tri-merge, which uses a report from all three credit bureaus, which are typically used in the mortgage industry. And that gives us an idea of your low, middle, and high scores when we review those reports. All right, so what's in a credit report? Well, typically there's a few main areas as you see listed here: identifying information such as your name, address, and date of birth, your credit history, of course, public records such as judgments, foreclosures, tax liens, or bankruptcy. There used to be additional information out there, but over the last several years they have removed some of that, but this is typically what you'll see out there. Any credit inquiries, hard pull inquiries as we refer to them as, over the last 24 months. You would also expect to see alerts for fraud or potentially identity theft or similar reasons, as well as whether or not someone is an active military service member. Now, keep in mind for number 6 there are typically reason codes that help describe why a credit score is kind of where it's at, why it's not a perfect score. There typically are at least 4 reasons that provide some basic level information as to why a credit score is comprised of the score it's at. All right. What and why a score? What is a score used for? Well, typically it's a quick predictive index for risk-based organizations like banks, credit unions, insurance companies, etc. And it helps us quickly assess how likely a consumer is to commit a 90-day or later late payment over the next 2 years. Okay, scores typically range from as low as about 300 all the way up to 850. Again, there are some different models, but typically that is the most common. If you have a 300, you're not likely to get approved for much. If you have an 850 and your debt ratio is in line, it's very likely you could get approved for just about anything that you might be requesting a credit score for. All right, so how is a credit score used? Well, as I kind of touched on previously, it's typically used for obtaining credit, whether you're looking to buy a house and get a mortgage, whether you need a new credit card, perhaps an auto loan. This also goes for a lot of other installment loans, ATVs, boats, anything like that. Insurance premiums. Insurance companies typically look at your credit scores as well to help determine what your rates might be and or if you are coverable. Rent and or lease companies typically will look at credit, as well as cell phone and or other utility companies to determine your worthiness for those services. Okay, and free stuff. So each of us as a consumer is entitled to at least one free personal credit report per credit bureau each year. So with being that there are 3 different credit bureaus, you could get up to 3 free credit reports each year if you so choose. A few different ways to do that. You can go online to annualcreditreport.com. It is free. You may not actually get a credit score with that report, but you will at least get the content of that report. You can use the phone and call in and again pass an identity test to obtain that information, as well as by good old-fashioned mail. All right, so this slide typically is the one we get the most questions about in our world. What matters the most? How is my credit score broken down? Well, this is a really nice overview from our friends over at FICO, which is the most typical credit score. It's not the only one out there, but they do a really nice job here that shows 35% of your score is made up of your payment history. So making sure you make your payments on time is very, very important for your overall score. The amount of debt that you have, the amount of balances that you have in overall credit can have an impact. So if you have a large amount of credit available and no balances, that's going to contribute positively to your score. Conversely, if you don't have a lot of credit and a lot of it is maxed out, as they say, your balances are up near where your approval limits are, that's going to have an adverse effect on your score. Okay. Length of credit history makes up 15%. So if you get a credit card or some other loan early on, say when you're around 18 years old and you keep that credit card or account open for the long haul, that's going to help boost your credit score over time, providing you make your payments on time and you don't have it maxed out again. But that certainly helps. So we'll oftentimes get asked if people should close cards after maybe getting them paid off in a consolidation or whatnot. Sometimes that is helpful, but oftentimes if a borrower can not, essentially put balances back on those cards, but allow the length of that credit card history to build out there, that's going to help a credit score. Okay. And the final two areas are comprised of new credit, how often you're getting new credit or credit cards or inquiries coming to your score. The less typically over the length of time, the better your score can be. And then your credit mix, the last 10%. Typically, in order to get a score above 800, you typically need to have all three types of credit, which are a revolving type of credit, like a credit card or a line of credit. You need to have a installment loan, like an auto loan, and then also a mortgage typically rounds out that area, okay? Here are a couple of credit tidbits, as I've kind of alluded to a little bit here and there, but typically if you have credit cards, you want to ensure that you don't have more than 35% of your available credit balance at the end of the month to help ensure that your credit score is going to stay in a positive manner, okay? Credit cards are considered maxed out when 90+% of the balance to the approved limit is showing due at the end of a month. So if you use a credit card and maybe you max it out for the month, but you pay it off before the end of the month, that's not going to hurt you as much as carrying that balance on that credit card month to month. Okay. The deferred student loans rule, we in the industry look at when we're trying to figure out how much of a payment to apply to those student loans when we're factoring in new requests, especially when we're reviewing the debt to income ratio. We typically look at about 1% of that loan is due for that payment standpoint on a monthly basis. Okay. And then rate shopping, as you look at the inquiries that could affect your credit score, the more often you are rate shopping or getting hard pull inquiries on your credit report, the more it's going to negatively impact your score. Now, there is also instances where if, say, you are looking to purchase a new vehicle and you go to several different dealerships over the course of, say, 2 weeks, and you have multiple credit pulls, that typically doesn't count against you. But if you're doing that every few weeks or every few months, then that absolutely will likely have a negative impact on your score, at least a little bit, most likely, okay? Moving on to the credit impact guide. So again, as we kind of touched on the previous slide, some things to keep in mind to help keep your score in a positive light. Here's the potential actual impact if you were to experience one of these scenarios for your credit. If you max out your credit cards and you carry a balance month to month, it has the ability to negatively impact you by up to 10 to 45 points, okay? Late payments, like we touched on earlier, very important, can have an impact of 60 to 100 plus points negatively on your credit report if you do have even a single late payment. New inquiries, again, as I mentioned on the previous slide, each one could potentially have a negative 5-point pull in a negative direction for your credit score, okay? And then debt settlement. Debt settlement typically refers to if you have a loan of some sort or a credit card balance, and let's say you find yourself in a scenario where you can't pay it all back, but you do settle for less than a full amount that's owed, that can have a negative impact on your credit score. Okay? And then, of course, on the flip side over there, foreclosure and bankruptcy can both have very negative impacts to your credit score. Now, payment deferments typically don't have a negative impact to your score. Oftentimes, you'll see student loans get deferred for a period of time before they begin their repayment. That doesn't typically have a negative impact. Keep in mind that these score ranges are all kind of more, they're not hard and fast. It's not an absolute, but generally a range of what could impact your credit score, okay? So recommendations and disputes. So you can't, really play until you kind of know how everything works here. So keep in mind, you want to try and keep your unsecured usage below 35%. Keep those credit card balances below 35%. If you can't pay them off every month, do your best to keep them low. Pay everything on time to help continue to boost that credit score up. Shop smart. When you go and look at that next used or new vehicle, don't necessarily have a credit pull an inquiry pulled until you know for sure that you do want to commit and move forward to potentially purchasing that vehicle. Or better yet, work with your local financial institution, hopefully TBA or whomever you might bank with, and work through that so you can be pre-approved for that vehicle versus going to each dealership or other institutions and having multiple scores and inquiries run. Okay. Be sure to check your score with one of the credit bureaus every 4 months or up to 3 a year, depending upon how you want to do that. And then on the flip side, don't let errors or issues with your credit report slide. There are options for you as a consumer to dispute things that are inaccurate or incorrect in some way. Okay, and there are regulations that are built out there to help protect us consumers if there is an issue. So if you do find something, be sure to dispute it, and then your institution or whomever the credit reporting agency you're working with is required to respond to that in a timely fashion. Okay, so I appreciate you taking the time today to review some of this information about understanding credit scores. If you would like more information about scores, or if you want to speak to one of our certified credit counselors here at TBA Credit Union, please visit the resources section of our website at www.tbacu.com, or feel free to call us here locally, 231-946-7090. Again, thank you so much for taking your time today.